Welcome to the Property Monitor Market Report for the month of September 2021. Dubai property prices increased a further 1.2% in September, now reaching a price of 968 dirhams per square foot. The last time we were at this level was May 2013, when prices were 966 dirhams per square foot. We're looking at now a month-on-month change of just over 1.2%, a quarter-on-quarter change of 4.8%, and a year-on-year change of 17.6%. If we take a look relative to the trough, that low point of the previous market, prices are now 23.4% from that low point. In contrast to the high, the peak of the last market, we're now 21.5% from there. Now, if we look at the current recovery and contrast it to the previous recovery in the last market cycle, we can see some similarities that are emerging. The last market cycle, where it ended in October 2012 at the lowest point, prices then went on to appreciate 37.3% over an extended sort of 2-year period. What we want to do now is look at the bottoming of this market cycle, which has occurred, say, last November, and the 11 months following from that, and contrast that back to the previous market cycle for the same 11-month period. So the current market cycle, we're at 17.4% for that 11-month period, whereas the previous market cycle, we're at 18.2%. So pretty much about the same rate of recovery. What's interesting though is in the last couple of months, the rate of recovery has started to slow down. Where about 4 months ago, we were topping in at about 2% month-on-month change. That's month-over-month been trending downwards, 1.8, 1.6, now 1.2% month-on-month change. So what we're seeing, contrasted to the last market recovery cycle, where we had a whole lot of highs and lows and a really sharp uprising, we've already seen the market rise up, and now we're starting to see it taper off. The reason for this tapering off is likely because the lack of sales of villas and townhouses now in the market. Whereas this is what's buoyed the market before, those sales are now starting to dry up and slow down. For the market to continue recovering and continue price appreciation, we're anticipating to see a shift towards apartments. And the growth in the apartment market should buoy the market and keep it going and keep our natural progression of the market going and growing for the next 12, 18, 24 months. Transaction volumes for September came in at another impressive high at 5,670 transactions, roughly 47% higher than last year and 41% higher than 2019. Now, September is typically a pretty strong month in our market, but is it as we expected? Last month in August was a very, very robust August, one of the highest we've ever seen actually. And that's atypical. Normally August would be one of the quietest months, if not the quietest month of the year. However, month over month, September actually fell below August. What we typically see here is September being the start of the end of year market. And we see September, October, November start to be the really strong months. Not the case this year. So has seasonality changed? Have fundamentals of the market changed where we'll no longer have that end of year market cycle? Or is this just a once-off? Now, those high transactions in August, they're a result of a lot of new off-plan sales coming in. And September may just be artificially and temporarily affected. And we could see October, November, and December continue the seasonality trend that we used to from previous years. On an annual basis, transaction volumes are very impressive. Year to date, there's been 43,405 transactions recorded. Well above last year, well above the year before, even further above 2017. We're now on pace to close around 58,000 transactions for the year, which is going to put us right between the market highs of 2013 and 2014 of the last market cycle. We could even surpass those with the effect of Expo coming in and the likelihood that we're going to see a rise in apartment sales over the coming months. Taking a look at transactions by registration type, that being either an off-plan sale with Nakud registration or a completed sale which is registered with a title deed. What we can see now is last month, just over 2,500 transactions were recorded in the off-plan Nakud segment. This is down 2.1% month-on-month on transaction volume, but on a market share basis, just slightly up 0.1% month-on-month. So this 55.4% market share is lower than the current year-to-date average, as well as the 12-month moving average. And the reason for this is that we're starting to see off-plan launches resume again. So those new projects are coming into the market and we're seeing less completed properties and also less properties where developers had unsold inventory and completed projects handing over right now. But we're starting to see more off-plan launches is going to start to change this dynamic. Where previously we looked at a 60-40 split historically in the favor of off-plan, that switched 60-40 on its head in favor of completed. Now we're probably going to find a new equilibrium in the market going forward. It's probably going to be somewhere closer to where it was before. Maybe it's going to be a 50-50 split, a 55-45 split, but with the new rise of off-plan launches coming on, we're going to start to see this number change and change the trend that we saw during the pandemic. Looking at the sister statistic to registration type is sales recurrence, where we're looking at initial sales, which represent developer sales of a property regardless of registration type, so be it either off-plan or completed, versus subsequent resales of those properties which are not developer sales. So last month, the market share for resales came in at 35.6%, slightly up month over month, but well below the current 2021 year-to-date average and the 12-month moving average, which both fall around about 43%. We're starting to see the change here as well. What's happening is we're not seeing as many properties in the resale market transact. The villa and townhouse segment is what has been carrying the market so far, and we're starting to see the expectation gap between buyers and sellers widen and sometimes become at an impasse, where expectations just can't be met. So we're seeing less resale transactions happen, and now we're seeing more off-plan properties come to market, so more initial developer sales happen. Looking at transactions by property type, you can see that apartments and villas have continued to decline month on month. However, townhouses have seen an increase in activity. Why is this? Well, if we look at it and look deeper, we actually see it's from initial sales, developer sales, and specifically it's a couple of key projects. EMA's projects in Arabian Ranches 3, Talal Al Gaf by Majid Al Futtaim, and then on the completed property side, Damac in Damac Hills 2, previously known as Eclair Oxygen. So we've seen this shift and this growth in townhouses, but only from one segment of the market, and that's heavily in the off-plan properties market. So on an annual basis, we're going to take a look at the property price tiers, the segmentation of the market down to the 9 main price points. And what you can see here on an annual basis, the lower price points, those below 1.5 million, they've all started to decline in the amount of activity that they're having, and the price points above that have all started to grow. We've seen this mainly again because of the townhouse and villa sales all falling in those price points above there. And what we keep seeing significant growth again is that 10 million plus market, which is the amount of transactions keep on breaking records month after month. So looking at September, while it might not be a record transaction month, on market share we're coming in at 3% and with 122 sales in the 10 million plus price category. Again, most of these sales are happening in Dubai Hills Estate and Palm Jumeirah, the most popular communities for these high-end price tiers. Year to date, there's been 875 transactions in the 10 million plus price tier. That's a 120% increase year on year, and significantly higher than the previous years, where in 2019 and 2018, there were about 200 and 300 transactions that occurred in those years. Rounding out a look at price tiers for the month, we're going to look at the 3 main price tiers: the upper, the mid, and the low price tiers, where the upper price tier, 3 million and above, has had another great month, representing about 18% market share at 736 transactions, and now eclipsing last year's number of transactions for this category by over 100%, and significantly more over 2018 and 2019. So you can see the higher end of the market has been what's moving, it continues to be what's moving, and is likely to be what's moving for the rest of the year going forward. Gross rental yields for the month of September came in at 5.7%, again coming down month on month, and now looking at a 12-month moving average of just over 6%, and a 2021 year-to-date average of just below 6%. Now let's take a look at residential mortgage transactions. Mortgage transactions in the month of September came in at 1,691, down roughly 10% month on month. This is led by mainly a decline in the apartment segment and the townhouse segment, with villas being the only one that gained pace over the month. To break these transactions down further, we want to look at new origination mortgages, which are new mortgages taken out in the same month the sale transaction occurred. We're going to break these down, also look at bulk mortgages, so mortgages that happen for a developer or an institutional investor or someone that's got multiple properties, say 5 or more properties, and also other transactions we classify as mortgages or refinances that happen in months other than the same as the sale purchased. New originations came in just below 37% for the month, slightly down month on month. Bulk transactions came in at 28%, and other transactions came in at 35.1%. To break down new origination mortgages further, we can take a look at the loan to value. The average loan to value last month was 75%, up slightly on a month-on-month basis, with the average ticket size for a mortgage being 1.93 million, up from 1.75 million last month, with a purchase price of just under 2.6 million, also up from last month. So where have mortgages been happening? Well, the number one community for mortgages last month was Discovery Gardens. However, a massive chunk of these from one sale of a building in Zen Cluster, building number 3. If we were actually to take that building sale out, there's only about 10 mortgage transactions that happen there. JLT, JVC, and Jumeirah Golf Estates coming in at all roughly 5.5%, with Emirates Living at 5%, Dubai Hills Estate, Dubai Residence Complex, and Dubai Marina all in the 4%, and then Nad Al Shibra at 3.4%, and Arabian Ranches coming back into the top 10 at 3%. One of the interesting things about a lot of these communities, and if we take Arabian Ranches as an example, there were more mortgage transactions that happened last month than there were sales transactions. So what this gives me an indicator of is that there's more people that are there that are refinancing. Maybe their rates locks change, they're on a 3-year fix, now that's come up for renewal, or maybe they're taking equity out to do renovations. If you look at a lot of these villa communities lately, what you're going to see is probably 1 out of every 3 sales that are happening is actually going through a major renovation. Walk down any villa community right now and you're going to see contractor signboards pretty much littered down throughout the street. So what we're seeing in a lot of the established communities, take your Emirates Living, take your Arabian Ranches, take your JVC, take these communities where you've got villas that were built 5, 7, 10 years ago. We're seeing a lot of renovation activity happening in these. We're seeing contractors being so heavy for business that they're actually having to turn down jobs. So this trend has been to buy villas at any price point and now get them and renovate them. And that was the Property Monitor Market Report for the month of September 2021. I hope you found everything interesting, and if you liked the video, be sure to give a thumbs up below, subscribe to the channel, or check out our website propertymonitor.com for more information.